Thank you very much for the introduction. That was almost a perfect pronunciation of my last name, something that is very, very difficult to do. I would like to thank TÜYİD very much for the invitation today. I sit on a few different boards, a few other IR societies in Poland and Middle East. Yesterday we had our conference, and people always ask me, oh, when you were in Turkey, please ask them how do they do the mentorship program. Please tell us how they do the education program. So I think everything that we have been talking about over here is an inspiration for other societies. It is very, very noticed. So I really wanted to start off by really congratulating the group for what you have achieved today. I remember being on the second conference about 12 years ago here, so I kind of saw how the development started. It was really, really fantastic. And also commend individuals such as Cihat, which you have been from the very, very beginning, or Muge, who also has been a main pillar in starting the foundations of investor relations here. So fantastic. My presentation today, maybe if we can, oops. Yeah, so I think my presentation today would be about some of the kind of global trends about investor relations that we are seeing. As Closer, we're very, very happy to be in Turkey. We have a lot of clients here in the room that I was very much looking forward to seeing. I managed to convince my colleague Rafal to come and join us, who many of you guys know as well through name, so he's over there with us. And I wanted to kind of talk about very briefly about some of the global trends that we are seeing in investor relations from some of our clients over here in Turkey, but also abroad. And I thought maybe kind of to frame the discussion well, we could maybe talk about what is happening in some of the kind of addressable universe for us, which is kind of like the active, maybe in the passive space. When we look at kind of the active investors and the addressable universe for Turkey, we typically kind of divide it in a way that into kind of three groups. So there's the kind of something that we call the mandate. So what is the mandate of the fund to invest? It can be a geographical mandate, or it could be a sector mandate. Most of the investors that do come here to the region, they usually go by the kind of the geographical mandate. So we have the Turkey funds, we have the regional EMEA, Eastern Europe funds that are also active. A lot of Eastern Europe funds were closed when Russia left the MSCI index, actually. And then we have with the global emerging market investors that have the mandate to invest in Turkey. They can invest it over here. Of course, some will have further restrictions like liquidity, so they'll be asking for, let's say, minimum trading value of, say, $500,000 or $1 million before they can make the position. Or they will have a market cap restriction, such as, let's say, $1 billion before a large emerging market fund can take place. But I think, however, this is kind of like maybe the starting point. And then we also had a big growth, probably since 2009, since Deutsche Bank sold the iShares business to BlackRock in terms of ETF and passive funds. And it really started becoming a discussion topic in such conferences within asset managers when it kind of turned out that about 50% of investment and volumes are actually ETFs versus active managers. And then this whole discussion started happening about active versus passive kind of investments and what are the trends. And I think the kind of the focal point of all of this was the fees. If you look at an iShares emerging market BlackRock ETF, the fees for that is about 1.1%. If you compare it to Aberdeen Asset Management, which is an active fund, they charge about 1.3. So it's more than 10 times more you're paying for the active management side of things. Probably for individual investors, it doesn't matter so much, but for pension funds, it definitely does make the difference. And then the question is, well, if you're charging 10 times more, are you making a much better job at the performance? And this is kind of where everybody becomes a little bit shy. And it turns out actually that there's no good kind of study that says that active managers are a lot better than actually passive ones. And I think with regards to ETF, there was quite a lot of innovation. The pyramid is a little bit different because if you look at developed markets, you see that there's a lot more assets under management in the passive shares, a little bit less, let's say, within the Turkey or the global emerging market even, and there's a lot more for things like thematic funds. And the thing that I really enjoy looking at every now and then is just opening the iShares website and looking at what are the new ETFs that are being launched and that are attracting quite a lot of assets. And before it was like, well, we have the emerging market, we have the US strategy, but actually now it kind of becomes quite interesting where you can actually look at an ETF that is very thematic, And then also something which is quite new, which is the actively managed ETFs. So the ETF would have a tracker, but then also you might have some ETFs that actually have a very, very much of an active strategy, and the ETF obviously would be trading on the exchange in the same way like the index tracker would. So I think it's kind of quite interesting to be kind of looking at those two areas, maybe from the outside. Then the interesting question is, okay, well, what can we do like from the inside to be attractive to those investors, to meet those investors? One of the things that we have been speaking quite a lot about is the direct and continual engagement. So we're encouraging companies to have a direct relationship with the investors. We find that it's very easy to do when times are great. So we have a lot of great markets where everything is going well. It's very, very easy to be in touch. The minute there's a crisis or something happens, that kind of proactive communication stops. When I speak to investors about what they expect from IR teams, is definitely having that kind of continuity. And one of the funds I recently spoke to from Thornburg, and we've actually published that interview, have told me that the difference between good and great IR teams is basically watching how the great IR teams behave when there's a crisis. Are we still open? Are we still transparent? Are we still having that lines of dialogue open throughout? What we are encouraging from our perspective is to identify the addressable universe and have a direct, proactive outreach to all the funds that are in that universe. A lot of people would say that yes, the investors can come to us if we want to, and I think this certainly is true. But there is also such a thing as equity sales, which is trying to reach out as a company to the investor and try to say, well, you have the mandate to invest in Turkey. We meet your restrictions. Would you be interested? And this is something that we have been trying to introduce in Turkey maybe over 5 years. We have a lot of positive case studies where companies use our tools to reach out to investors directly and manage that relationship with them. And I think this is also the case in other parts of the world, maybe started after MiFID II regulation, where small cap and mid cap investors were let's say, impacted. The other trend that we're seeing is tailoring the message. So I think a lot of companies have, for example, starting to have different presentations for different audiences. So we have some companies that have a separate site on their IR website that says for new investors. So when a new investor that has not met the company in the past, perhaps has a different set of material that you were introducing. Or maybe when you go into a conference and you're seeing someone who is, you've met maybe 5 or 6 times, you're preparing a slightly different presentation to them than someone completely new. Or maybe a Turkish fund versus a global emerging market fund. Again, these are different audiences. They expect a little bit different messaging. And perhaps within AI, which I will talk about in a second, this might be useful. Index inclusion is something that is becoming interesting again, and one of the reasons is that before the index inclusion criteria were always based on market cap. So people were saying, well, the best way that I can be included in the passive index was just to grow my market capitalization, and then naturally I will be added. It actually turns out that the index inclusion and the passive funds that follow the indices have adopted different strategies. So it's not just the market cap. It might be kind of such as metrics like gender equality on the board. It might be metrics such as profitability. It might be metrics like financial ratios or thematics investments. So we have been very interested in the space of index inclusion and seeing that that space is changing quite a lot. So why not? I mean, given that 50% of the assets are in the passive space, doesn't this deserve a little bit of a focus to try to understand those indices and what is their criteria to be included in that index at least? And the ESG reporting, I know that we have a lot of discussions about it. We're seeing a little bit of a disconnect between the little bubble that is definitely forming in European Union with the new regulations that is coming. I think every conference that we attend in Europe, there's a lot of talk about the SDR regulations, which basically means that as we have GRI, SASB kind of optional, a lot of people do, you choose what you want to disclose in the GRI. With the new European regulation, it's actually, you're given 1,200 data points that you have to disclose. Not only this, you have to have that audited. So there's quite a lot of costs, and this is coming to life next year, and not only for the public companies, it's also for private companies that meet certain revenue criteria. And then the question is, well, speaking to large cap companies, how much do investors really ask you? And I do understand that the ESG reporting is not only for the investors, but for the context of this presentation, we speak to companies and we ask them, well, do investors often bring up ESG, or how big of a talking point this is? And it actually turns out, yes, it is interesting. Yes, it gets mentioned every now and then, but it certainly doesn't justify the huge amount of effort that is being put into regulation, reporting, standards. So I think that there is a little bit of a kind of a disconnect. And one of the big talking points in the other IR conferences this year, were like, where does the ESG reporting really fit? Does it really fit under the IR umbrella? Does it fit under reporting umbrella? Is it more of an accounting administrative function? Certainly when we speak to funds, they will say, yes, it is interesting, it is important, but maybe not as important as the amount of resources that IR teams are putting into this. I wanted to talk also about a couple of kind of bigger trends, not just the IR, and I think the area is AI. So I have a view from the outside and view from the inside again. I presented to TÜYİD last year our little chatbot, where we've been kind of looking at creating a chatbot for investor relation teams. We've been watching the developments of what is really happening in the AI space right now. Quite busy, but I think we're still building the kind of the infrastructure layer at this point. So there's a few different models that are coming out at this point, and the question is, how do we create those models? How are these models regulated? If they're being tested and if they're being trained, how are being trained? The big question of whether to open source it or not. So there are two camps. There's quite a lot of people that are saying that, yeah, that those models should be open sourced. We should be able to see how they are being trained and what data. The first model of ChatGPT was built on 80 swimming pools of paper someone calculated. So the question is, what went inside? How was it trained? What are the biases? And I think that's kind of quite a lot of the multi-model approaches. I mean, I was testing that recently. It basically means that we're not only texting, we're able to sense how you look like, how you smell, how you feel. So you can imagine having a doctor app where that person is able to see and sense more than just kind of text. So I think that this space is developing, and the ethics and regulation is also a kind of a topic point. Should this space be regulated or not? Should how the models are built be regulated? Should things like deep fakes, or the person who presents your weather, does it matter if it's a real person or not? And I think this is kind of all kind of happening kind of at this space. How is it relevant to us? Well, we created this little matrix. I mean, we did this last year, and kind of very little has changed in this 1 year, about kind of 4 areas: so reporting, engagement, insights, and we try to kind of analyze where the existing, let's say, applications, could be useful. And I think kind of like the verdict was that in some areas like reporting, engagement with investors, meeting preparations, predicting themes of the meetings based on previous experiences, trying to understand shareholder movements better without looking for it on the websites. I think these are the things that people are kind of playing around with. But then there are a lot of other areas where I think we feel like it will take a very, very long time to kind of for it to get there. The other kind of out there theme, which maybe will take a few years before we talk about, is kind of blockchain. It's an area that we've been looking at very, very closely. This is something called. The way that I look at blockchain is basically a verification mechanism that basically verifies that something is true. So if I'm sending money over to you, usually the bank says, I have 10, now you have 10. With the blockchain, you don't need the institution to verify that transfer. So this kind of opened up the opportunity that, well, can we send money to each other without banks? Can we borrow money to each other without banks? And it kind of gave birth to something that is called DeFi, which is kind of a little bit of a kind of a shadow space. The big question mark was, okay, this is not regulated, so it's for speculators. But actually, it looks almost certain now that with the Trump administration, there is going to be regulation in this space. It is going to be a formal thing, and then things like stable coins, which is just basically $1 on the blockchain, so you can basically move $1 on the blockchain, will become a reality. And then lots of talk about tokenization. So if we can move money very freely to each other, without costs, without barriers, can we move other things? And the discussions with a lot of people are, well, maybe we can move stocks, maybe we can tokenize a Turkish equity and make it available to everybody without having access to the exchange, without having access to local brokers. Probably will take some time for it to get there, but it seems to me, I'm looking at this, and for me it's a question of, it will definitely happen, and it will just take some time. In the same way like we're sending data and email to each other via the internet, we now have an ecosystem for sending value to each other. And the financial markets, the capital markets, is sending value effectively. So if there is a much better way to do this, then sooner or later it will get there. I wanted to put this over here because I think it will be relevant for us. I think we will be hearing more about this space, and I think it will become a reality for us that we sooner or later, probably sooner, we are going to be having a market where actually our shares or our equity or our debt or something that we tokenize, maybe like real estate, will actually have a different infrastructure layer that is accessible. And the last thing, maybe this is kind of, again, more than 5 years ago, is the 3D web. I don't like to use the word metaverse. I think it's kind of all kinds of connotations involved in it. But again, looking at some of the recent developments or some of the recent tools that are released by, whether it's Meta, and I'm not a big fan of that, and I'm also kind of Apple Vision, also not a huge fan of that. But I think it seems also very, very clear that the future of the web is not the website. We will be having a very, very different experience of navigating the internet. Probably it will be some kind of combination of augmented reality. People don't want to wear glasses, but I wouldn't worry about the hardware part. This will take some time, but it will solve itself. I've seen companies that are working on contact lenses that kind of provide some kind of things. Again, for me, it's an issue of probably a question of when this will happen, rather if this will happen. Serious limitations right now of hardware, of bandwidth, interoperability. So if I create my own, virtual glass or virtual world, would it be available? And in some areas of the internet, this is already happening right now. So you have millions of users using things like Flight Simulator, and when I fly Flight Simulator in this kind of virtual world, it almost looks almost exactly the same as the pictures of the real thing, or the golf simulator, which again is like it looks very, very, very, very good. So the question then would be, well, what is our role as brands online? Keeping in mind the online world will not be a website anymore, and maybe also as investment, as IR professionals, about what is the opportunity to tell our investment case. I always ask myself, why is it that we are sticking to a website and IR presentation to tell the investment case? I mean, there must be much, much more interesting ways that we can be leveraging technology to tell how a factory works, to show how the restaurant works, for the benefit of maybe somebody who is sitting in Miami, who doesn't have the option to travel to Istanbul, for them to have this immersive experience. So again, I think this is maybe something that is out there, but I thought again I'll just put it on here, maybe for the record, that when we do the TÜYİD conference in 10 years, I would have been the first one to have addressed it. So thank you very much. Wonderful to be here, and look forward to the rest of the day.